Today was a rough day in the stock market. The S&P 500 closed below $4,200, a key technical barrier, and it hasn't closed below that level since May of this year. Honestly, in my opinion, this means I think the market could sell off a little bit more throughout the end of October, especially with tax loss harvesting for mutual funds. But I think that'll likely propel us higher come November. The main reasons for the sell-off today was because of Google's worse than expected cloud revenue from the Google's earnings report yesterday, and that weighed on a lot of the Nasdaq stocks. The Nasdaq was down 2.5% today, and the Nasdaq had its worst decline since February of this year. Google was down about 9%, which was its worst decline since March of 2020. This comes as bond yields were still hovering not 5%, but around 4.95%. Investors are still anxious in the bond market. And Facebook, the good news is that Facebook just reported their earnings and they smashed expectations. Their revenue was great and their net income was up about 160% from a year ago. So that's the good news. And I think that'll likely send the stock market higher tomorrow. But make no mistake, today's sell-off in the stock market was hard to see, especially with, as I said earlier, the S&P 500 closing below that $4,200 level. And hopefully there will only be a few more days of pain like this, and then it sets us up technically at least for a very strong November and December.